talk to us, just give us your overview of growth and evolution of the mutual funds industry in Nigeria.
Thank you very much. Well, since the market crash that started in 2008, we've seen an increase in new issues in the mutual funds space. That has been driven mainly by the fact that returns in the equities market have dropped significantly. A lot of retail investors who didn't have the sophistication to invest in the capital market lost a lot of money. So what the fund managers have done is that they have seen an opportunity to go after this market segment with mutual funds. What mutual funds does is that it provides an investment window for retail investors to pool resources together, minimize their risk, and get an expert manager to make investments on their behalf. So we've seen increased new issues, basically to take advantage of the opportunities created in that space occasioned by the market crash. In terms of size of the industry, basically because of the new issues, we've seen some growth. The total assets under management for the mutual funds industry now is currently about 200 billion. We have about 50 to 70 funds offering various types of products. Most of these products are skewed towards the equities, but now we're beginning to see more fixed income, money market-based funds in Nigeria. So there is some opportunity in that space.
Let's talk about the point you've just raised, that most investors focus on equities and not necessarily fixed income. How are you changing that mindset, and what are you doing to draw attraction to mutual funds?
Well, essentially, I think the SEC has provided some leadership in that respect. The new DG of SEC has said that one of our core objectives is to restore investor confidence in the market and protect investors. As a corollary to that, they have identified collective investment schemes as a driver of investor confidence, minimizing risk for retail investors. Basically, so we see a lot of leadership from the point of view of the regulators. In addition to that, we've seen fund managers coming out with new types of products, mainly on the fixed income side and money market side. Like I said, the fixed income side of the business of the markets seems to be growing, basically because of activities in the corporate bond sector and government bond sector. So there are newer products in that space. Right. So in terms of development, what we see in terms of outlook is that the product base is going to increase. Of course, there are still lots of restrictions on fund managers on types of securities they can invest in or asset classes. There have been some fund managers that have tried to invest in unlisted securities in recent times, and the SEC has not given approval for that. So we expect that there will be a deepening in the market, an increase in the product base, a lot of focus on investor education, because again, going back to the fact that a lot of retail investors lost money in the market a few years ago, a mutual fund would be a good way to drive investor education, and the SEC is supporting that aggressively.
Let's talk about the role of the SEC, because recently they've increased the level of oversight in terms of the kinds of asset classes that fund managers may direct investments into. And for many, there is a feeling that the environment has become a bit constrained and overly regulated. What's your view in terms of the challenges that fund managers are facing?
Well, I think from the point of view of the SEC, what they are trying to do is to minimize the risks to investors. On the part of investors, there's a reduced appetite for risk, and most investors are also looking for safe investments. So the SEC is riding on that to ensure that fund managers do not structure products that will place investors' funds and investments at greater risk. However, for the market to grow and to be deepened, it's important to also expand the asset base. So what I see happening is that a lot of fund managers, once the fixed income space has been exhausted, will engage SEC to allow other asset classes to be included in the list of approved securities. On the equity space, where there are opportunities, we see that even though the market has gained about 30% year to date, a lot of analysts still report that equities are trading at significant discounts to their intrinsic value. What that means is that for retail investors, investing through a mutual fund is a good opportunity to take advantage of this undervalued securities, hopefully looking forward to greater returns in the future.
You've referred to the stock market crashing in the 2008-2009 period, and for many skeptics, it's an indication of very poor risk management strategies that were applied by fund managers. Just in terms of the growth of the industry and the needed confidence in fund managers, what is being done?
What is being done from the point of view of regulators or
Yes,
the fund managers?
both sides.
Well, I think for the regulators, like I said earlier, there's a lot of emphasis on collective investment schemes going forward. There have been discussions over the last 1 year on strengthening the regulatory oversight, instilling greater efficiencies in how funds are managed, better reporting, more transparency, and things like that. On the equities market side, I wouldn't say that the fund managers are to blame for the returns. For the crash in the market, I would simply say that there were a lot of investors, retail investors in the market that didn't understand what was going on in the market, that didn't really follow the market from a technical point of view, and were simply chasing returns. What the fund managers can do is step into that space and say, hey, we can guide you in this respect. Make a lot of efforts on the side of investor education, like I've said earlier, and provide a window for retail investors to come in at a low investment threshold and generate reasonable returns from the capital markets without putting their funds at serious risk. So on the side of the SEC, I would emphasize investor education. Again, I will emphasize increasing the asset base. The asset classes that can be invested in. Again, I would emphasize better risk management oversight on fund managers.